The market sold off early today, profit taking. The Dow stayed down most of the day while the Nasdaq and the S&P 500 came back up toward the top of the trading range. And the Dow eventually came back up toward the top of the trading range. What would not be unusual to see once the indexes have come back up to a major resistance like the 200-day moving average, for it to bobble around a little bit, waiting for the T-line to catch up, and then use a T-line crunch to put it up through. The S&P 500, after opening lower, closed higher, near the higher end of the trading range. Even though it traded down, it showed us that the bulls were still in the market, that they hadn't disappeared. Chart patterns like QCOR has this rounding bottom, and notice where the rounding bottom has taken it. Took the T-line up through the 50, pushed everything through the 50. Now we're into breakout territory. This is the type of chart that can usually create a very strong uptrend. Looking at the calls for December on this one. Why December versus January or February? Because this is going to have action right now. You might as well buy the closest call options. And VC is another chart pattern that's moving quite well in a rounding bottom. This one can be bought on positive trading. The nice thing about candlestick analysis is it allows you to take advantage of price patterns that have worked consistently through the decades and the centuries, that the Japanese rice traders were allowed to make big money from and convey that information on to us. We'll see you in the chat rooms.